Yeah, it's kind of just a negative day, but nothing too dramatic. One interesting sector was the casino stocks. They were rallying. They've been getting sort of creamed on a lot of the news coming out of Macau and how slow that is. But there was some developments about easing travel restrictions to Macau, and so they had a pretty good day.
7 days versus 5 days, more people coming for longer, therefore, boom, our revenues could go up. Nevertheless, Joe, 1,367 days since our last correction. That's our count-up clock, and that's pretty exciting right now because we're like a week away from earnings, so things could get really exciting.
Speaking of countdowns or count-ups or something, or anniversaries.
You're counting.
This week was the 6th anniversary of the economic recovery, and it's been so long, and yet it still looks like the recovery is going to go on. There's no recession in sight. And it's also one of these permanently disrespected recoveries. No one's ever taken it seriously. People always had a complaint, but it keeps chugging along and probably going for a while.
It's kind of like the run we've seen in U.S. stocks. It's like the most hated bull rally. Like, no one wants to be excited about stocks here at these levels where we have valuations, but yet, nevertheless, we still grind a little higher.
All right, speaking of economics, I want to dive into the terminal to take a look back at this morning's jobs number. And I want to look specifically at U6. So the main unemployment rate we usually get, that's called U3 in the tables. U6 measures discouraged workers, people sort of in the fringes, people who might want a job. Anyway, we got a really nice drop from last month when it was at 10.8. I'm getting better at circles.
Oh, my God, that was like the best circle in 2 weeks.
To 10.5%. That's a big drop. And so this jobs report wasn't great. I said it was kind of meh. But these key indicators, this is an indicator that Janet Yellen likes to watch to sort of gauge labor market slack. It keeps improving, and we keep getting to, numbers where the Fed is going to like what it sees.
Yeah, and that's a good point. I've seen some notes out of talking about just that the slack is worse than not as bad as we thought. All right, well, my deep dive here, I want to get into the Bloomberg terminal to talk about the Baker Hughes rig count. This was crazy cool today, everybody, because for the first time since December, we actually added oil rigs here in the U.S. It's a really slight uptick, but there it is. 12 oil rigs added, and the reason why that was a big deal is we've seen the oil rigs come off as we've seen oil prices come off, and shale has slowly been starting to add some rigs back. All 5 of the prolific plays in the U.S. all added rigs. Eagle Ford actually added 3, and the reason why this matters is because if oil companies are coming back in, they're going to keep drilling now. That's going to have some kind of issue for the recovery in oil prices because you're going to have production keep flowing, and that's going to cap oil prices.
Yeah, the oil rig declines have become so consistent over the last several months that I almost, stopped paying attention to them. 2 p.m. every Friday, Baker Hughes.
And then I saw 1 p.m.
Oh, see, that's how rusty I am on it. And now they're back up.